I did this video like 3 months ago talking about why Michael Burry could potentially buy bonds going into 2023, and it got a lot of pretty positive feedback. And the main reason I decided to do this video was because Michael Burry was actually signaling deflation through many of his tweets. This is one of his tweets where he said inflation has peaked. It's not the last peak of the cycle. The CPI is likely going lower, possibly negative in the second half of 2023. Now, my whole point was that if we will ever have a negative CPI in 2023, which a lot of pretty popular people like Jeff Gundlach, like Michael Burry, and many others are pretty much talking about, TLT has massive, upside potential. The TLT is a 20-year bond, treasury bond, is sitting at 2013, 2014 type of lows. If it ever gets back to what it was before, which I don't think it will, but if it ever does go back, where it used to, trade at before, you're talking about over 59 to 60% on the upside. So the upside is pretty much massive for TLT, which is why I saw that maybe Michael Burry, would buy bonds. But I was wrong on this one so far, as I haven't seen anything in Michael Burry's, 13 Fs of him actually buying bonds, maybe because of some CPIs, surprising to the upside. But I believe personally that TLT is very, very interesting at this part of the cycle, and I'm gonna tell you exactly why in this video. And for us to determine if this is really the best time to be buying TLT or not, we have to look at two variables. The first one is inflation. The second one is the federal funds rate. And let's start with inflation. We look at the year-on-year CPI, and it has been falling sharply every single quarter. And this is the metric that Michael Burry talked about, where we could see, negative CPI. And it's mainly more of a, reversion to the mean or the law of excess numbers. If you look at what happened, in 2022, we had massive inflation, and comparing 2023 on 2022 is going to be a pretty, a tough comparison. And this is, we could see it in many commodities that have been going down a lot. Like lumber is down 61% year on year. Sunflower is down 53%. Oat is down 51%. Butter is down 37%. And a lot of these agricultural commodities and others have been going down. Even oil started to go down, then it went back up, but it's still much lower than what it was in 2022. So inflation is clearly coming down. And this is key for the long-term bonds, because when inflation comes down, then the Fed can lower interest rates, and these bonds can actually perform very, very well, especially the longer term type of bonds. But while the CPI is actually coming lower, the main argument is the core PCE, because this is what the Fed is actually looking at. And if we look at the core PCE, it has pretty much gone nowhere from July of 2022, pretty much nowhere. It goes up a little bit, it goes down 4.6, 4.7, but it's sticking around 4.6 and it's not going lower. But I believe this is actually, pretty much due to the lag, the owner's equivalent trend, which I believe is eventually going to roll over, and as it lags a little bit, it's going to start showing some weakness. It should start showing some weakness, in the second half of 2023. You have many other things that should start to show weakness. So I believe the core PCE is eventually going to come down. So if we all, I believe, can agree, then inflation is not going to pick back up to 5, 6, 7, 8%. And I don't believe we're going to have a negative CPI, but we could have maybe, 2, 3, 4, even 5%, like 4 to 5%, CPI on average for 2023. And this is going to be key for bonds, and I believe this is actually not a bad thing for TLT in general. Now, this is the chart I'm going to show you, which is really key, and this is what is really telling us if now is the time to be buying bonds or not. Now, this is very important for us to look at between the relationship of the federal funds rates and the long-term, bond yields. And if we look at the red line, there's a pretty interesting pattern that pretty much happens every single time. And this is the federal funds rate. Every time the federal fund rates peaked, the 30-year yield actually peaked. It never made another high. So it did peak in 1989. Whenever the federal funds rate peaked over here, 30 years started coming down. It never made another high. The same thing happened in 2000. If you look at this pattern again, whenever the federal funds rate peaks, the yield goes down. And when the yield goes down, the bond appreciates, which is TLT. It actually goes up. So what we can see over here, especially even in 2006, when the yields peaked, TLT actually peaked, or the 30-year yield, and then it started going down, which is what we really want. And the same thing happened in 2018. Whenever the federal funds rates actually peaked, it was a good time to buy TLT. This is my whole point, that the best time to buy TLT is whenever we are nearing a peak in the federal funds rate. And maybe the Fed is done hiking, maybe they have only a quarter basis points more to go, like 25 basis points more, and that's it. So we are nearing the end of the tightening cycle, and this is telling us that TLT has most likely bottomed at such levels and is most likely going to go up from here. Now this is the trick, this is the tricky part, that for TLT to really appreciate in a major way, we have to have federal funds rates actually coming down. You could see how whenever federal funds rates started coming down in 2007, 2008, we had a lot of panic. When this started to happen, the yield of the 30-year went down, meaning the bond actually went up, appreciated, and this has caused massive moves in TLT and in many other bonds. The same thing happened in 2020. Whenever the Fed started cutting rates, this is when TLT has seen most of its appreciation. Now the Fed, they said that they're not going to cut rates in 2023. This is more of a 2024 story, and we can see it on the dot plots. If we look at the dot plots over here, meaning what FOMC members are expecting, they are expecting around a 5.1% a rate for 2023, around pretty close to 4.1% in 2024, and then cuts from 2024, 2025, 2026. Now, they don't have a good track record of being right. So I believe it will most likely be massive cuts either in late 2023 or most likely in 2024. I think we will be back at 2.5%, which is what they have as a neutral rate, pretty close to 2.5%. So we really need the Fed not to only stop hiking rates, we need them to start cutting rates for us to get paid on TLT. But what this graph is showing us is whenever we are nearing the end of the tightening cycle, it has been historically a good time to be buying bonds. And I believe this is the case right now. But the big problem is that if we look at what happened between 2006 to 2008, pretty much 2007, they paused for 365 days. So they paused the federal funds rate around 5.5% for pretty much 1 year. And we could look at what happened to the yield. It pretty much gone nowhere. It went down a little bit, then it went up, so it went down, it went up. So if you were holding TLT between 2006 to late 2007, you pretty much made nothing. It was up and down, which what we could potentially have right now, meaning yes, it could be an amazing time to buy TLT, but TLT itself might not do nothing for a while if the Fed is actually serious of pausing. If the Fed starts cutting rates, this is when you're going to see the massive appreciation in TLT. So to sum up the video, this graph is telling us that it's a very good time to be buying TLT historically, but we don't know when we are going to get paid on buying TLT. It could be 3 months from now, it could be a year from now, it could be 2 years from now. But as we talked about, that if inflation starts coming down, and if the federal funds rates get back to the neutral rate, 2.5%, I mean, I could see TLT 125 to 130, maybe 135, which is again pretty amazing historically, and it's around 20-25% on the upside from today's prices. Now, if I had to buy TLT, I would wait as close to $100 as possible because it has rallied recently. I would wait for a short pullback, and then I would enter TLT, as I believe it's been historically a good time, to be buying TLT. But the only problem is we don't know how long it will take us to get paid on such investment, which is why I did many things in my portfolio with TLT in the options market. I did not buy TLT itself. I did some things with option, which could give me a pretty, limited downside, pretty high upside scenario to benefit from TLT in case the Fed really starts cutting rates in the second half of 2023, like the market is actually pricing in. So it will be interesting to see what happens. This graph graph is telling us it's a good time to be buying TLT, but it doesn't tell us when we're gonna get paid on buying TLT. So thank you for watching this video. I promised you an update on TLT and I delivered, so I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.